Thank you so much for joining us. While we have a few more individuals dialing in, my name is Tony Carvajal with Florida TaxWatch, and it's a great joy to have you here, even if the subject matter of this Wednesday webinar is a bit unfortunate for Florida, and I know that there's a lot that's being dealt with in the state. We're going to be talking today about what's next in Hurricane Ian recovery. And before we get started, I do want to highlight that at the end of next month, we're going to reconvene for our annual meeting down in South Florida at the Biltmore Hotel, November 30th through December 2nd, where we'll not only be updating folks on information like what we'll cover today on about Hurricane Ian, but we'll have broader conversations about what happened this last year and what we expect for next year. We'll have results of the elections and leadership participating in those broader conversations. You still have an opportunity to register at floridataxwatch.org/programs. And I particularly want to highlight that if you would like to join us and stay at the Biltmore, the hotel deadline is on Monday, October 31st. So we'll allow you to register for the program after that. But if you want to stay in this wonderful property down in Coral Gables, Florida, and join us, I think that you'll have a great time. Not only will our members be here, but I want to highlight that one of our keynote presentations, particularly on December 1st, is former Governor Jeb Bush, and he has a lot to reflect on over the last few years. Over the coming hour, we're going to be discussing issues related to recent hurricane that hit Florida, Hurricane Ian, and the recovery efforts that are going on. No need to remind any Floridian that on September 28th, Southwest Florida was significantly impacted. And while there's a lot of attention in the Southwest Florida corridor, there were the properties in the Keys, through Central Florida, through Northeast Florida, and all the way up into South Carolina, faced direct impacts from the storm and are still dealing with this as we end the month of October. I'm going to turn it over in just a second to my colleague, Bob Nave, who will facilitate and lead this particular program. Bob is the Senior Vice President of Research here at Florida TaxWatch. But as the screen here points out, if you'd like to submit questions, you could either use the Q&A feature or the chat feature, and we'll be monitoring both as we go through the event. And I will do my best to make sure that we have questions answered. And if we don't get to it today, we'll try and get back to you as quickly as we possibly can. If there are, and I think that at least one or two media are registered for this particular event, you'd like to speak to any of the individuals that are making presentations or will have comments throughout the day, contact us directly or Allie Coleman. Her number's on the screen there, 850-391-5040, and we'll make arrangements for everybody to follow up with you. And with that, I'm going to turn it over to my colleague, Bob Nave. Bob, the floor is yours to discuss what's next in Hurricane Ian recovery.
Thank you, Tony. We are fortunate to have a panel of people who are extremely knowledgeable on hurricane recovery issues and issues that are related to hurricane recovery. I want to take a moment to introduce our panelists. First up is Eve Rainey. Eve is the Executive Director of the Florida Emergency Preparedness Association. I had the privilege of working with Eve at the Division of Emergency Management. And we worked a number of hurricanes together, including Hurricane Kate, Hurricane Elena. What was that other one, Eve, the big one?
Mr. Andrew?
Andrew, yeah, Andrew. How can I forget Andrew? Following Carrie will be, or Eve will be Carrie Hebrank. Carrie is a senior governmental consultant with the firm of Carlton Fields in Tallahassee. I had the privilege of working with Carrie at what used to be the Division of Emergency Management. We were on the team that implemented the 1985 growth management legislation, and Carrie has done extensive work with the home builders, and she's extremely knowledgeable in the rebuilding part of the hurricane. Also joining us will be Fred Karlinski. Fred is the co-chair of the Insurance Regulatory and Transaction Practice at the law firm of Greenberg Traurig. Fred is going to join us mid-seminar webinar, so we may have to juggle the lineup a little bit to accommodate his schedule, but we'll make sure to get Fred on. Fred is going to talk about property insurance. Enough said about that. And also, we have Kurt Winter, Senior Vice President of Research at Florida TaxWatch. Kurt is our subject matter expert on all things budget and tax related. And then finally, Meg Canan, one of our research analysts, is going to talk about an aspect of hurricane recovery that is often overlooked. And by often, I mean always overlooked, and that's census data and how census data factor into hurricane recovery operations. So with that, Eve, I understand you just got back from Southwest Florida. So what's it look like down there? How's it going?
Wow. First, let me say thank you so much for bringing us all together today and for including our association. For those of you that don't know about FEPA, we're the State Association of Emergency Management Practitioners. And I know a lot of times that brings to mind government-centric kinds of emergency management practitioners, but we basically have members from all sectors: private sector, volunteer, nonprofits, non-governmental. I'm sure I'm leaving someone out. So again, we're more than 1,000 strong now, and just incredible coordination and mutual aid and cooperation going on for all facets of this across the state. As Bob mentioned, I recently was in Southwest Florida. Got to look at some of the damage firsthand. Incredible. You guys, have seen the pictures and the presentations and the devastation. It really hits home pretty quickly. I'm a native Floridian and actually grew up in Southwest Florida, so a lot of it really brings it home to me. But to tell you the truth, I spent most of my time in the Lee County Emergency Operations Center, and lots of things that we'll talk about today I actually saw in practice in the Emergency Management Operations Center. So it's going well. The mission is going well. Even with the devastation, there's obviously lots more to do, but the coordination has just been beyond exceptional since even before the storm hit.
Well, it's been, as Tony pointed out, it's been 3 weeks or so since the storm hit. So a lot of the immediate emergency response stuff, the debris clearance, and getting the streets cleared and the power back on and things like that are probably moving along pretty good. But what of the immediate emergency needs, what is the most pressing unmet emergency need?
Really, it's the continuation of many of the things you've already mentioned. We still have folks in shelters in Southwest Florida. We still have lots of feeding and wraparound services for the communities impacted by the event going on in the field. You're right, the initial search and rescue and restoration of services and those types of things are demobilizing, except for some of the areas on the Barrier Islands and Pine Island, Sanibel, Captiva, where we still have crews working to restore electricity and more importantly, the backbone of the infrastructure and the electrical system there. So that will be going on for quite some time.
Well, you mentioned that the coordination was going well. How is something this massive coordinated?
I tell you, it's amazing. As you mentioned, I've kind of been in the business for a long time, and Florida, number one, is very fortunate to have an extremely strong, professionally organized statewide emergency management system. And as you mentioned, Andrew, something that has been built and evolved since then. Again, there's multiple layers of government that are probably the first that come to mind in this coordination effort. County emergency programs, municipalities have programs, the state of Florida, obviously the federal government. And since day one, everyone's been in pretty much lockstep on this one. It starts pre-event with coordination calls with the National Hurricane Center and the state of Florida and our federal partners. And those types of coordination calls continue today. In fact, I just had a recovery coordination call. So now we're moving into the recovery phase. So the coordination has gone quite well. I'd be remiss if I didn't mention all the volunteer and private sector efforts that are a big part of that coordination, and lots of those over the years have evolved as lessons learned and best practices from other events that we have coordinated in Florida into the framework of the system that exists today.
And you talked about people in shelters. The need for temporary housing, I imagine, is pretty significant. How is the housing need being addressed?
Yeah, as you mentioned, everyone knows in Florida that we have a pretty tight housing market, rental market in particular. There's several federal programs that can assist with that, with temporary housing assistance if you can find a place. I just read this morning, Charlotte County is relaxing some of their requirements to allow folks to bring RVs and those kinds of temporary solutions onto their private property as they are rebuilding their structures. FEMA has a relatively new program called Transitional Sheltering Assistance, where you can actually utilize the hotels and that as temporary housing alternatives for folks that are displaced. So, I mean, that's always a big one after an event for those that are displaced long term, and you'll see those options continue to evolve and expand as we move forward.
Okay, and then that's a good segue into the rebuilding effort. So, Carrie, when you as a housing rebuilding expert look at the mess on the ground down there, how do local governments go about rebuilding after something like this?
Well, that's a good question, and I think a good way to start is kind of look at the assessments from the storm damage. And I think that I had a photograph of Fort Myers Beach that kind of shows the housing stock. And if you look at this photo, if you guys can see it, they kind of track the age of homes. Fort Myers Beach, a State University of New York distinguished professor, Michael Bruno, did this. This shows 18 homes that were built before 1981. You can see they go back as late as 1926. And most of these homes were wiped away completely by the storm. But if you see the home that's circled, that home was built in 2020, and it appears to be almost unscathed. And I think what we learned from this is, one, that this home is elevated above much of the storm surge level, but the roof here also looks undamaged. I think it's important to note the wind gust in Lee County ended up being 125 miles an hour with about 120 sustained winds when it got onto the land. What they found, the University of Florida and Auburn University also sent professors and students down to kind of assess the damage after the storm. And then they found that the homes and the roof systems built to the newer codes survived really well. But the losses for homes built prior to 1996 were twice as high, and the damages were much more extensive. The same holds true in Punta Gorda. They had 135 mile per hour sustained winds, but their buildings also did well. And a lot of that is due to, you kind of are going, well, why would they have newer housing stock than Cape Coral? And the answer is Hurricane Charlie in 2004. So after 2004, they built to the newer code, and those homes also sustained a lot of damage, but did really well. Homes that were elevated beyond the first floor is supposed to be uninhabitable space. They also did well, because what we require now in the updated building codes is structural load continuity, such as roof to wall connections. And the other thing to note, I think, and this may be where local governments have a change of heart, is that mobile homes took a severe beating. Some of that's representative of an older housing stock, where newer mobile homes do better. I think local governments are going to allow people to rebuild. Otherwise, you've got, Bert Harris issues. I think what you'll see on the building code is the next edition of the code will probably be called the surge edition. In other words, we can handle the wind events. Right now doesn't deal with the water damage that we saw with the surge. And if local governments deny rebuilding, there's going to be Bert Harris property right actions, right? So we've got to figure out, what we do for resiliency, what we do for rebuilding in coastal areas. Does that mean we elevate more than what's required right now?
Bert Harris is a familiar name, and it takes me way back. If these people and looking at the photo you showed, a lot of those 1930, 1940, 1950 built houses look like slab on grade, no elevation type of construction. And
Right.
assuming that the property owners can get financing to rebuild, what new requirements come into play? Will they be required to elevate? And how does the Bert Harris property rights issues factor into all of this?
So I think they will be required to rebuild, and going back to that house from 2020, it did well. So I think what you're going to find is we have to determine how to address water flow and flooding issues that impact homes. We haven't quite gotten there yet on that. And then the buildings that we build and the infrastructure will be paramount to that. The legislature has started resiliency grants that local governments can apply for now. So it's going to be up to local governments as well to kind of implement programs to deal with the water issues. And that's going to include elevating, doing coastal protection, such as wetlands and natural vegetation buffers. We've seen some of that in South Florida. We do expect there to be new elevation requirements in flood-prone areas and coastal areas. We do expect that to come out of the building code. I think another thing we need to look at is another important piece is how the Florida Building Commission interprets the legislature's revision to the roofing requirements this past special session, where they kind of relaxed a provision. The code used to require the entire roof to be replaced, even if a small section was damaged. And now they're going to allow these, repairs instead of having to replace the entire roof as it was originally constructed. But again, I think the question is, does the roof have to be repaired to the latest building code, or is it repaired to the code that was in place at the time the home was built? And nobody's really has an answer to that yet. So that's another piece of the puzzle that kind of has to get resolved, moving forward.
But if the roof was built to older codes and the roof is repaired to the older codes, then there's no mitigation involved in there at all, right? I mean, what would make one think that roof wouldn't be damaged the next time?
Right. There's not, right. Exactly. There wouldn't. And we've added provisions, like I mentioned, stronger roof to wall connections, water barriers, that wasn't required before. So, I mean, you would think that they would build to the newer code, but it's unclear.
And there will be, I imagine, tremendous pressure put on local government officials to allow folks to rebuild exactly the way it was.
I assume so, but you're supposed to build under the code that's in effect, right? When you pull the permit.
Mm-hmm.
So if you have to get a permit to rebuild, you're kind of pushed into the new code. So cost is going to go up from that standpoint. You're also going to have higher costs from just the fact from an insurance perspective, which I'm sure Fred will talk about, and mortgages are going to cost more, right?
If you can
so
get
all of that's going to impact in a time period where we have supply chain shortages. So it's going to be a lot to rebuild, and you're right, folks are going to want to rebuild what they had, but they're going to have to build under the new code when they rebuild.
Looking at the photo that you showed, there are a lot of homes in the right side of the picture that look like the roofs are pretty much intact, look like they were built newer and under the newer codes, and they seem to have done well. The houses on the left half of the picture, not so good. What stops developers from coming in, buying up all of those lots, assuming that the people can't get the money or they can't afford to rebuild the new codes? What stops developers from coming in, buying all this property up and putting hotels or condominiums or multifamily structures in its place?
Well, as you know, their comprehensive plan would have to allow for, that type of development in that area first off, which, not to say they couldn't get a comp plan amendment to cover that. But I mean, actually nothing except cost really will prevent replacing single family residences with high rises or hotels. We have an affordable housing crisis in this state, so increased densities are one way to help with that problem, with the ever increasing housing need. Keep in mind, though, in light of the Surfside collapse and the resultant legislation, condominium owners and those living in high rises will have additional code and compliance costs that they didn't have pre-Surfside. So there may not be as much a rush to go live in a condo that there would have been, a year and a half ago, just because of new requirements that are going to be put on and compliance costs, things like waterproofing and, the assessment studies and having to have the reserves, at the time that you can actually do the repairs and not put them off. So, but really there's nothing except costs that would, and a comp plan amendment that would prohibit rebuilding with, condominiums, high rises, hotels.
Okay. Well, I see Fred Karlinski has joined us. Fred, thank you for joining us today. Let's talk a little bit about the insurance. The legislature had a special session in May, did some things with the intent of stabilizing the insurance industry going into the hurricane season. Probably the last thing anybody wanted to see was Hurricane Ian. So how has Ian affected the property insurance problem, and how do you see us going forward?
Well, thanks, Bob, for that question. Thanks for putting this on, and thanks to you and TaxWatch for highlighting. Obviously, we live here in paradise, but there is a cost to paradise, and part of it is dealing with natural disasters in the case of hurricanes, as we've seen. Let me also just comment on the points that you and Kerry were making a few minutes ago on mitigation and the building codes. Florida has the most stringent building codes in the nation. They work well. I think we saw in 04 and 05 when 8 hurricanes crisscrossed the state, the difference between a mitigated home and an unmitigated home. And it's interesting, at that time, the building codes were not as mature and had not been around as long as they are, now and have been now. And so there were a lot of homes next to each other where one home that was mitigated really reacted much better to the storm than the unmitigated home. And in speaking to the CFO and speaking to the governor directly about what they saw down after Ian, the same thing held true. Where you had a mitigated home, where you had a home that was built to the building codes because it was built after the building codes were put into effect, you saw a significant difference. And so I applaud the legislature for passing that. People need to take note that there is a big difference between a fortified home and an unfortified home. So let's talk about Ian now, which had the effect of making our already troubled insurance market even more troubled. $7.3 billion to date in insured losses in the aftermath of Ian. Over 600,000 claims total, and that number is increasing every day. About 400,000 of those claims are residential property homes, yet only about 3,000 are private flood insurance claims. I bring that up to highlight the fact that even though I would say a significant portion of the claims that we will see after Ian and the losses would be flood losses. I say would be because not everyone has flood insurance, which is unfortunate. And if there's one thing we can take from Ian and should take from Ian, it's the importance of flood insurance. But I think the private market is just getting to the point where people understand that it's there. People still, by and large, if they have flood insurance, have it through the NFIP, the National Flood Insurance Program, which is administered by FEMA. So it's a federal program that if there's losses in, we all ultimately have to pay for. But this is a significant storm. And one of the things that we've seen over the past 15 years is that storms are getting stronger and wetter because of, and you know, we've gotten away, I think, from causation on why the climate's changing. We know that there are changes. We know that resiliency is an important thing. And so this is going to be a big storm, certainly to the area that it affected, Pine Island and other islands around there, and Fort Myers, from a loss of life standpoint. And from a infrastructure standpoint, it's going to be devastating for some time now. It's going to be changing of that landscape forever. I think what the state of Florida government did in terms of getting those bridges back up is historical. That will help in mitigating and rebuilding. But the bottom line is this is a huge insurance event in a industry that has already seen, you know, sucker punches over the last couple of years, to the point where we've had in the last 12 months 8 insolvencies of Florida property and casualty insurers.
Well, the measures that were taken during the special session, especially the $2 billion general revenue appropriation for the reinsurance assistance program, and you know, looking back, that seems to be extremely timely. Do we know the extent to which insurers will not be able to pay off claims? Was that $2 billion enough to permit all the claims to be paid, or what do you think?
So let me say this about the legislature and what they did in the special session. Number one, I think the timing was important. And I think the governor, the CFO, and the legislature showed extraordinary leadership in putting RAP in place. You know, the view was that if there wasn't a storm, then they wouldn't have to spend those dollars, and it would still be able to protect insurers and consequently insureds in the state of Florida. And so it was a really smart way to go about a very difficult problem. I think what we have seen is the following. I think that the insured losses will be bad here, but they may not be as bad as we ultimately thought on the wind side versus the flood side. So that $2 billion will certainly be used. It was an important stopgap. The reinsurance market worldwide is tightening quite a bit. And so that $2 billion and even more of those types of things will be necessary moving forward. But I think that what you're going to see is a majority, keyword majority, of the insurers that were standing before Ian and that were going to stand after Ian will continue to stand.
Now, looking ahead to the 2023 legislative session, what's your guess as to what the big issues are, property insurance wise?
Well, I think before we get to the 2023 session, Governor DeSantis has articulated that he wants to do another special session before the end of the year. My sense is that special session will focus on, among other things, litigation reform, because litigation is one of the main reasons that we're here, one of the main cost drivers that the state has the ability through the legislature and legislation similar to what was passed in Senate Bill 76, 2076, and then during special session. I think litigation is something that needs to and will be addressed moving forward. I think we've seen a lot of fraud, waste, and abuse in the claims process. I think that will be addressed contemporaneous with that. And my hope is that we'll look at the availability and affordability of the reinsurance market. Reinsurance has been critical to the ability for the smaller carriers to write business in the state of Florida. And let's face it, the state of Florida, as well as many other coastal states, most coastal states, rely now on smaller insurers for their marketplace. And that's okay. The larger insurers would be irresponsible if they put their entire balance sheet at risk for the risk of hurricane or for any one particular state. And so it's okay that we have a mix of smaller companies, mid-sized companies, and large companies writing. What's not okay is when those entities cannot get, or when reinsurance for those entities is neither affordable nor available. And so I think, and my hope is that there will be the ability to look at the RAP program, say that that was very successful, and come up with some adjunct to that that will provide a gap, a stopgap, if you will, between the CAT fund and the private marketplace as well. Make no mistake about it. What we've encountered in the state of Florida, where you have 8% of all of the claims nationally, and that's a round number, and about 80% of the litigation, when we know litigated claims cost 4 times what an unlitigated claim costs, the man-made problems that we've seen in Florida, mold, sinkholes that weren't really sinkholes, AOB, and now just litigation that's spiraling out of control. Those are things that we can, and I think the legislature will course correct moving forward under the leadership of the governor.
Well, I'll be anxious to see how that plays out. You mentioned businesses, and there are a lot of businesses in Southwest Florida that are damaged or destroyed, not generating revenues, but still they have their expectations that they pay their taxes. I want to turn the program now to Kurt Winter, Senior Vice President of Research at TaxWatch. TaxWatch recently came out with a list of recommendations to kind of ease the tax burden on taxpayers and businesses, some of which have been put into effect. So Kurt, you want to take a few minutes and brief us on those?
Sure. Thanks, Bob. Yeah, we put out a list of 9 recommendations to, in the short term, kind of take away the burden of having to comply with the tax laws for a little while people take care of really pressing personal issues. And then in the long term, try to provide some actual tax relief to people impacted by the storm. And as Bob mentioned, some of these have already been implemented or have been support for them has been voiced for the long-term tax relief ones. So let me go through what we recommended and what they've done so far. First, we recommended that you postpone the deadlines for tax returns payments and notices and waive penalties and interest for late filings in affected areas. The first thing that happened was DOR following IRS tax relief for corporate income taxes, that starting with due dates on September 23rd and any due date between then and March were extended until March. DOR then a little bit later extended any due dates before November 23rd for returns, reports, and payments for most other taxes until November 23rd. This includes sales taxes, reemployment taxes, communication services taxes, dock stamps, insurance premiums, motor fuels, and some other taxes. So that's going to help people not have to worry about their, dealing with their tax obligations right now. That certainly does not make them go away, but gives them more time to comply. We also recommended that they extend the rates for residents to take advantage of the tax discounts that you normally get for paying property taxes and special assessments. If you pay in November, you get a 4%. If you pay the next month, you get a 3, and then a 2, and then a 1. And so we recommended that they extend those so people can get the full benefit if they can't pay right now. The governor issued an executive order that extends all these due dates by 2 months, including the April 1 final due date. So people are going to be able to still make their installments. They're still going to be able to pay early and get a discount. and they're not going to have to worry about actually paying their taxes until June. We also recommended to protect individuals and business taxpayers from the risks of notices that they won't receive because their home or business address is not accessible. Also to issue no new audits in severely impacted areas, extend the statute of limitations, and postpone existing audits that haven't reached the assessment stage because they can't be responded to. There hasn't been an official policy like publicized about that, but we have heard that DOR is reaching out to taxpayers under audit and postponing the date, and we commend them for that. Also, initiate procedures to offer payment plan assistance for late taxes rather than resorting to the standard collection like liens, levies, and bank freezes. So those are the things that we are recommending for the short-term administrative release, and also to protect them over the longer term if so there penalties and interest for not complying with the tax laws. We also made some recommendations about actually providing some tax relief. The biggest one was that they retroactively apply a tax that they passed last year to provide property tax refunds for residential property that was rendered uninhabitable as a result of a catastrophic event. So if your home was uninhabitable for 3 months out of the calendar year where the storm occurred, you would get a refund for those 3 months based on the difference between the assessed value and what the value of the property was after the storm. Now, this was not the law that passed last year. Doesn't take effect until the 2023 tax year. So we're recommending that they put it back to the 2022 tax year, because people that are paying taxes are starting to come due right now. They're paying based on the value of their home on January 1st, 2022. So we're recommending that goes, that we make that retroactive to provide them some relief. This only covers residential property, doesn't do anything for tangible personal property and non-residential property. We're recommending that they look at some way to provide some relief there. Now, as Fred mentioned, the governor has said he was going to call a special session before the end of the year for insurance. He also wants to cover these kinds of issues. And the incoming Senate President, Kathleen Passidomo, has voiced support for the idea of the refunds for uninhabitable homes, saying that she doesn't believe that people who can't live in their homes should have to pay taxes during that time. So we expect something to happen there. Florida, luckily at this point, is in very good fiscal shape. We have a significant multi-billion-dollar tax surplus or budget surplus. So there is some money to help local governments with this, because it will cost a significant amount of money. Even if you only look at the 6 most effective counties, and this is available to any home in the state that was damaged. We're talking about 10% being $400 million. So the law already calls for Florida to help reimburse the fiscally constrained counties, but these counties that are by the coast aren't fiscally constrained counties. And so doing that, helping them with those replacing that revenue will be expensive. The last thing we did is we are asking our congressional delegation to push to pass another disaster tax relief act that they've done for past hurricanes. And these acts have included provisions from like employee retention credit, an enhanced casualty loss deduction where you can deduct more from your income taxes for a casualty loss, and a lot of other different tax relief provisions. So hopefully, we appreciate what the governor and the department have done up to this point and the receptiveness of the legislature to do this. So we're hoping that this whole list will get enacted. So any
Kurt,
questions?
thank you very much, Kurt. Now moving on to our last panelist, Meg Canan. Meg, talk to us about the implications for the decennial census and the American Community Survey.
Thank you, Bob. So Florida TaxWatch hosts a Census Institute. We have been looking since 2020 and throughout this decade at research that reveals what are the significant uses of census data. Florida is one of only 6 states with a statistically significant undercount. And so it's especially critical that we understand the use of the census. So moving forward, we can have more motivation for completing the necessary surveys. So when it comes to Hurricane Ian, the census was very important with planning, recovery, and responses. The census provide us with the data points that help us to understand the communities that are impacted. So they have tools such as the My Community Explorer and Census Business Builder to help them determine what areas are vulnerable and what sort of industries are going to be impacted by Hurricane Ian's hit. It also is responsible for census-derived funding. Some of this funding is disaster funding, such as community block grants, federal assistance programs, such as the Supplemental Nutrition Assistance Program, are census-derived. And so as we have more people who are relying upon these programs, we want to make sure we have robust census data that shows the number of people who need it. We also have to worry about annual funding. Every year we get money from the federal government that's based upon our census count. And so we have already estimated that in the face of disasters such as pandemics or hurricanes, we can lose up to $2.1 billion per year of potential funding. And as these areas are trying to recover, there's going to be no loose change. So it is very unfortunate that we're missing this funding this year, but moving forward, we should use this as encouragement to be more proactive about filling out our censuses so we can make sure that we are gaining access to all the funds we need. When we look specifically at the counties that were hit by Hurricane Ian on the next slide, you will find that about 1/3 of residents did not respond to the census count on their own. What this means is that we call this the self-response rate. And the self-response rate is correlated with complete census counts. So in the future, if we can get these communities to have higher self-response rates, it will build their resilience for future storms because they will have more access to valuable data and funding.
Okay, that's all your slides?
Those are my slides.
Okay, cool. All right, well, thank you, Meg. I see, Tony, before I turn it back over to you, I see we've got 3 questions in the queue. The first 2 I'm going to address to Eve. And Eve, one of the viewers is asking about what's the status of recovery operations in Central Florida and Northeast Florida. We spend a lot of time and effort chronicling what's going on in Southwest Florida, but what's it like in the Orlando area and up around the Northeast Florida beaches?
Yeah, great question. The Ian definitely had its impacts across the strait. Those counties, those communities are included in the federal disaster declarations, the individual assistance as well as public assistance. But many of those areas do still have ongoing response operations, pumping and effects from the continued flooding and that type of thing. And as you mentioned, the Northeast Florida and the effects on the coastline and those. So it's interesting in Florida, of course, as it goes across, each of those areas are kind of in a different stage of their response and recovery effort, and those continue.
Okay, and the second question again is for you, and it's when are we going to see the FEMA trailers arrive?
Yeah.
Bring them on. Well, Carrie's got to help me with that one. As I mentioned, I just read this morning where Charlotte County had relaxed some of their, zoning regulations to allow folks to bring the RVs on site. And now whether those are acquired personally or the FEMA trailer. So, that's, our cliche, that's one tool in the toolbox that hasn't necessarily been implemented, but there's certainly discussions of that ongoing.
Okay, and then the final question, Fred, is a question for you, and it deals with citizens looking at the cost to the state, and can citizens absorb the load that they're going to get?
So that's a great question. And I know it was part of Governor DeSantis's response to the second question in the debate on Monday night. So citizens has the ability to levy assessments for losses in individual accounts. So citizens and the CAT fund right now, with the billions that they've been able to build up over the course of time where we didn't have losses in those entities, actually are in really good shape. And I would buttress a point that, Bob, you made earlier with the and Kurt did with the financial state of our state. We're in really great shape in terms of we've got virtually no debt. Most of the debt was paid down between Governor Scott and Governor DeSantis. You've got a pension that is largely funded. And in our two residual market mechanisms for insurance, in Citizens and in the CAT fund for reinsurance, you've had billions of dollars stockpiled over the last couple of years, frankly, since we had major storms in the state of Florida. And so both of those entities have large amounts, billions of unencumbered cash that they can use to spend on claims. To the extent that there are losses that exceed the cash on hand, they have mechanisms, loans, and other mechanisms to be able to not be behind the curve in terms of payments that need to be made. But to the extent there is and are losses that exceed what their balances are, they have the ability to assess. And so one of the problems with those mechanisms is they're great when they work, and they're great when there aren't storms that exceed the amount of cash that they have on hand. But to the extent that is exceeded, there will be assessments on policyholders for many years to come. And so that's why it's really important to continue to foster a healthy private market so that we can avoid those assessments. I would also mention that for the 8 companies that went insolvent earlier in the last 18 months or so, that those will be their claims and their unearned premium will be covered by the Guarantee Association. The Guarantee Association also assesses. So you see this back end mechanism whereby if the residual markets and the guarantee fund can't meet their obligations, there is an ability to assess, i.e. tax, to make those entities whole. Every citizen in the state of Florida in some way, shape, or form, if you drive a car, there are very few coverages that are exempted from those assessments. And so look to see those assessments affect us for a while. And if for no other reason, we should try to make sure that we keep those residual market mechanisms as low as possible, because those assessments could have the effect of doubling premiums moving forward.
And we got a related question, and again, as we move away from the coast, the water shifts from moving water in the form of surge to flooding from heavy rains and some of the tides. Those people who have suffered damage and don't have flood insurance, what's their outlook?
Well, first of all, I think the lesson learned is even though we don't want to consider Florida in a flood zone totally so that people have that option, I think people do need to look at flood insurance moving forward. And I think it's not only people that have a mortgage that's backed by Fannie or Freddie where that would be required if you're in a flood zone, but I think everyone in the state of Florida needs to look at flood insurance. I think, the federal government may come up with a program to handle that as an entity that can print money to deal with a situation like this. The federal government is the best equipped to deal with that. At some point in time, it does become a fairness issue when one neighbor bought flood insurance and another neighbor didn't. How do you handle that? What's the right and equitable way to deal with that? But I think, you know, we should talk to our congressmen and women and talk to the folks that represent us in DC and make sure they understand how important it is to see if there is a federal program available that it does get instituted for victims of Ian, because I think what you are going to find is a majority of these claims are going to be considered flood claims and are flood claims.
Okay, thank you.
For those of you who are on the webinar, if you'd like to submit questions, you can use the Q&A feature or the chat feature. We'll stay on this call for just a few more minutes. And if we notice that something else comes in after the call, or if there's some way that we can stay in touch with you after this, we'll do our best to follow up on anything that we don't cover. Thank you.
Excellent. And Tony, I think that concludes our panel discussion today. I'd like to thank our panelists for taking the time to share this, their knowledge on this very, very important and relevant issue. So Kurt, Fred, Eve, Carrie, Meg, thank you all so much. Tony, I'm going to turn it over to you. Take us home.
Sounds good. I think that what I'll mention is that we're going to continue to have these conversations later this fall when we convene November 30th through December 2nd at the annual meeting of Florida TaxWatch at the wonderful Biltmore Hotel in Coral Gables. But there's much more that you can also do to keep us involved in this conversation leading up to this program. On the screen, you'll see some of the email addresses, but if you'll go to our website, floridataxwatch.org, you can continue to communicate with us. I want to highlight just one moment. Let me switch screens for a second, because I do want to point out that there was a website. Oh, apologies. Going off script, and that's always a challenge here, Bob. So if you need to tap dance or anything while I make this all work. Let's see. You notice that Kurt referenced a number of different actions and recommendations that we have put forth, and very thankful for the governor and the legislative individuals who have already pointed to the fact that they are interested in pursuing these items. But I also want to thank Verizon and Collaboratory for working with us to distribute funds. If you are interested in providing support in the affected region and would like some advice or guidance on what we can do, or if you have resources that we can post on here. I think one of the things that we have learned over time is that we don't have to reinvent the wheel. Let's share the details of what is already out there, making it easy for Floridians to find the information that they need. You can go to our website at floridataxwatch.org and particularly find the Hurricane-Ian-recovery page. We'll post information there, and happy to share it in our weekly newsletters. I do want to just end with just that one last reminder that I hope that you will join us November 30th through December 1st at Biltmore Hotel for the annual meeting. And with that, Bob, if there are no further questions, we'll stay on for just another minute here in case somebody does want to submit final questions. Lena, thank you very much for the kind words. We do host these webinars on the final Wednesday of each month. Next final Wednesday, we're actually going to be meeting together at the annual meeting, so we'll miss November. And because you probably want to celebrate the last week of December with your family, we'll probably bypass December as well. But if there are other topics that you'd like to see featured on the webinar series that we have on here, let us know and we'll make sure to deal with it. Fred, you were fantastic today, as you were when you covered the property insurance issues before the last special session. So maybe we'll pick your brains right before the next special session, which is projected to be in early December. So with that, folks, thank you so much for joining us here at Florida Tax Watch. And we look forward to working with you not only through the rest of this year, but well into next year.